What kind of year is 2023 going to be for asset classes?
Well, I think it's actually not going to be too bad. If you sort of look at the macro backdrop and think that you've got the US probably going to go into recession at some point this year, Europe's already in recession. China, well, what's happening there? But it's certainly been struggling recently. You've got a war in Ukraine. You couldn't almost start from a worse position, and yet, you just get the feeling that actually this year isn't going to be so bad. You've got the prospects of global rate policy peaking out. You've got inflation across the region in APAC having largely turned the corner. Prospects perhaps for some easier policy across the region. Now, all of that ought to be quite supportive for risk assets. And I think at some point they will really take a solid lift. But if you look at the way the market's been behaving end of last year, beginning of this year, it's still fairly tentative. It'll whip around a lot. Bond market can be up and down 10, 15 basis points on the day, seemingly with almost nothing going on. So it's a tricky one. But I think when it goes, it could go quite hard.
Okay, so for investors in risk assets, potentially going to be a pretty good year. But I mean, we've seen basically peak inflation that's starting to roll over, ease off. We're going to see peak rates possibly as soon as well. And growth is slowing, though. So for the average man on the street, and we've been talking about job losses, layoffs, et cetera, it could be a lot tougher.
Yeah, I mean, there's a real sort of dichotomy here between the real economy and the financial economy, which, is very often the case. So for people at large, the real issue for them is seeing their wages undercut by inflation, cutting away their purchasing power. That doesn't help. Labour markets, yeah, they've been softening, just shown the career data there. It's a double-edged sword, that one, because what that does also say is policy is working. The tightening, the bad-tasting medicine is having its effect. And the central banks will be looking at that and thinking, okay, well, if that's now happening, then how much further do we have to go? How much worse do we have to make things before we can go, okay, it's probably near enough there, and we can start thinking about the next leg of this policy, which is the downside. And of course, financial markets are always extremely forward-looking. So, the first hint that we're heading towards the end of the worst, or peak misery, if you like, will be the bit where they go, right, this is where we need to start putting money to work and trying to not miss out on the up leg when it comes.